Okay, good evening everyone. Good evening. So, in previous class we had discussed till here how to record bad debts. In today's class we will be continuing the adjusting journal entries. Provision for bad debts we had stopped actually here. From here we will have to start today, right? Yes. Okay. Now understand. Whenever there is a bad debt, what is bad debt first thing? What is bad debt? We have already told there are two types of sales. Two types of sales. One cash sales, one credit sales. Credit cash sales means what? I sell the goods, I receive the money immediately. Credit sales means what? I sell the goods, but the money will come after few days. That is credit sales. That means you are selling the goods on credit. So bad debts will not happen here. Bad debts is not possible here. Why? Because you sell it, you immediately receive the money. So there is no chance of bad debt here. Clear? Bad debt happens only here. Say for example, I sold goods worth 500 rupees to Mr. X. Now what happened? I sold it on credit. So when I sell, what is the entry I make? Mr. X account debit to sales account. Correct? This is receivable. Receivable is an asset. When asset goes up, it will be debited. Sales is an income. When income goes up, it will be credited. Correct? 500, 500. Now what happened? After like 15 days, X pays me 300. What is the entry you record? Bank account debit to Mr. X 300. Okay. Now what is the balance remaining? Sir, 500 ittu, 300 vapas bantu. We received 300 back. Now what is left? 200 rupees. Now what happened is, after 15 days, we came to know that X is absconding. Say for example, Vijay Mallya. He went to UK, Dubai, whatever you call, he is absconding. He settled outside now. Now whatever this 200 rupees you had to collect will no more come. That means you had Mr. X balance of 200 rupees. What was that balance? Receivable balance, debtor balance, correct or no? So that balance is no more receivable. That means it is no more your asset. Why, sir? Why it is not receivable? Legally, yes, you have to receive that. But the problem is the debtor is absconding. You can't get that 200. What is the criteria for asset recognition? Probable future economic benefit measured reliably. What are the two criteria? Probable future economic benefit inflow and measured reliably. Second, measured reliably we are accepting, but probable future economic benefit inflow is not fulfilling. Correct or no? Sir, why it is not fulfilling? Simple, sir. 200 rupees, if he would have been in India and he would have been paying us 200 rupees, then yes, probable future economic benefit inflow was there. But now he is absconding. There is no more probable future economic benefit inflow. Why? He goes. That's it. He is out of country. He will never receive. So there is no chance of future economic benefit to you. Correct? So it is not fulfilling the criteria of asset recognition. That is why now it is time for us to reverse it. Make it zero. No more it is an asset for us. So when you want to nullify the asset, when now our asset is going up or coming down, it is coming down. Why, sir? Because we no more can recognize it an asset because we won't receive any money. So when asset comes down, it will be credited to Mr. X. Now what is debit, sir? Is it our loss that we are unable to receive 200 rupees? Yes, it is our loss. So it is an expenses. Yes, it is an expenses. So when expense goes up, it will be debited. So what is that expense called as? That expense is called as bad debt. Bad debt. How much? 200. 200. Clear? Yes. Now our X account, if you open the X account, first it will be 2 sales, 500. Next it will be buy bank, 300. Correct? We still had 200 rupees receivable, but no more receivable. So it will be buy bad debts, 200. Now accounts become closed. There is no balance carry forward or balance to be brought forward. Nothing is there. It is closed. Clear? Now what happens to this bad debt, sir? This bad debt is an expenses. So if you open the entry, bad debt account, if you open ledger account, it will be to Mr. X 200. Is it an expense item or income item, asset, liability? What item is this? It is an expense item. We already know, right? Expense item will never get carry forwarded. Rather, it will be transferred to P&L. So I will transfer this to P&L. So what is the entry? P&L account debit to bad debt 200. Allige bad debt account gets closed. The amounts get transferred to P&L. Now if you open P&L account, it will be showing like this: 2 bad debts 200. That's it. Understanding? Now P&L, what happens? You will either arrive net profit or you will arrive at net loss. While arrive at net profit or net loss, this figure will be considered. Clear? Okay. This is how you treat your normal bad debt. Bad debt account debit to X account. This is the entry you pass. Okay. Yes. Now, there is one more way of recording this transaction. Oh, is it, sir? How is that, sir? How is that? I will show you. See. When bad debt happened, what is the entry we passed? Bad debt account debit to Mr. X. Correct? Yes, sir. Bad debt account debit to Mr. X. Now, what happens is, there are multiple parties like X. Multiple parties. But let's take this example where X has not yet gone out of India. He is not yet gone out of India. He is there. He is there in India only. But looking at his situation, say for example, every day while going to the walking, he comes with me. Every day he comes happy. But since last 15 days, he has become sad. That means he is facing losses, or he is having some family trouble, financial trouble. So I am understanding that he is having some financial trouble or some losses. But he has not told me clearly that I will not pay you. Okay, he has never said I will not pay you. He said I will pay you. But I am having a doubt. I am having a doubt. Correct? So if I am having a doubt, what I will do is, somewhere I am feeling this person will not pay me. So I will create a provision for he not paying me. I will create a provision for he not paying me. He may not pay me or he may pay. I don't know. But I am suspecting that he may not pay me. Clear? Because I am suspecting he may not pay, I am creating a provision. What is provision? Provision is something which you create if you feel, or not exactly feel is the right word, if you feel probably or possibly this person might not pay me. More than possible, it is the word used is probable. Probable means more than 50% chance. Clear? Possible means 50-50 chance. Possible is the word which we use for 50-50 chance. Probable means more than 50%. In other words, it can be 60 to 70%. So you are 60 to 70% sure that he will not pay you. 60 to 70% you are sure that he will not pay you. So what you do is, you directly don't decrease the amount from his account. Why? Because you are only 60 to 70% sure. In our first case, what happened? He has already absconded to Dubai. So 100% sure that he will never come back or never will get money. But here, he is still in front of me only. But I am getting a doubt that he is not going to pay. Clear? Yes. So that means what? There is chance that he may pay also. There is a chance that he may not pay also. But I am having a doubt. So what I will do is, I will not reduce his account. I will not reduce his account. Rather, I will create a provision for that. Sir, how provision is created, sir? Simple. Bad debt is an expenses. So I will pass bad debt account debit. It is an expenses. Earlier, what we used to do? To Mr. X, we used to write. But here, we will not write it as to Mr. X. Rather, we write it as to provision for bad debt. To provision for bad debt. This is the entry which we will record. Sir, where will we show this provision for bad debt? If you remember our balance sheet, in liability side, I told you current liability, non-current liability. Under current liability, you will show all the provisions. All the provisions. Provisions can include electricity payable, salary payable, bonus payable, rent payable. Have we told about this? Have we discussed earlier? Yes. Under this only we will show this provision. Sir, what happens to this entry? This will go to P&L. This will get closed. This will get closed. But this one acts like a liability account. Sir, why it is acting like a liability account? Because we don't know. We have already claimed the expenses, but this may be expenses. This may not become expenses. When it may not become expenses, sir? If party pays me, then what happens? It is no more my bad debt. Correct? That time what happens? I will reverse it. Provision for bad debt account debit to bad debt. That time my provision becomes 0. That means earlier we created liability, now we are reducing the liability, and earlier we claimed it as an expenses, now we are reversing that expenses. So what happens? Say Mr. X, he has to pay us 200. Now we are having a doubt that he will not pay us. So what I will do is bad debts account debit to provision for bad debts. 200. Okay. Yes, this will be transferred to P&L. This will carried in balance sheet under liabilities. Now suppose what happened is, sir, what happened is after 15 days, he paid 100 rupees and remaining 100 rupees he said, I will not pay. Remaining 100 rupees I will not pay. So what is the entry I will pass? The entry I will pass is bank account debit 100 to Mr. X 100. Okay, na? Yes, okay. But sir, X account had a balance like this. X account, what is the balance? 2 sales 500. Once he made the payment by bank, he made a payment of 100. Sorry, not no. Earlier he made a payment of 300. Now again he is making a payment of 100. What is remaining? 400 here, 500 here. So there is a balancing figure of another 100 rupees. So it will be by balance carried down. Correct? But this by balance carried down is not allowed. Why it is not allowed? He is not going to pay us. He is not going to pay us. So we have to close this account. How do you close this account? Bad debt. Correct? Yes, sir. Bad debt, sir. But should we record it as bad debt account debit to Mr. X? Answer is no. Why no, sir? Earlier you recorded like that. Yes, that was first method. But in the current method, have we already not doubted this first only? We had a doubt about it earlier. That is why what we did, we created a provision like this. We already created a provision. We have already recorded the expenses. Correct? We had a doubt. We had a hunch about it. Right? Now, because we have already recorded, what we do is Mr. X account. Earlier, we recorded the expenses and we created the liability. Now that liability is going to come down. Why, sir? Because my hunch was correct. It went right that he is no more going to pay. So whatever 100 rupees balance is there, which is an asset account, is no more an asset account. When you want to nullify or reduce your asset account, you are going to credit. So to Mr. X 100. In our previous method, what we used to do is bad debt account debit anta hoditidvi. No, that is not allowed. Why? It was in earlier method. But in the current method, what we are following? We are already passing the bad debt expenses and we are creating the liability. So what we do is we pass this bad debt to provision for bad debt account 100. To Mr. X 100. Clear? Now, if you open your provision for bad debt account, what will happen? Here, the entry will be by bad debt. Earlier, we created a provision of 200. Correct? Out of this 200, we are writing it off against Mr. X. So, it will be to Mr. X 100. Still there is a balance remaining? Yes, sir, balance is remaining. We will carry forward this balances. To balance carry forwarded 100. So next year what happens? This will come here by balance brought down 100. Clear? So this is a liability account. What account? liability account. Okay. Suppose what happens is, sir, what is the issue, you know, sir? This, I expected him not to pay 200, but he paid me 100. The remaining, sorry. So, I expected him not to pay 200, but he paid me 100. So, whatever earlier I had created provision, no sir, out of that 100 is only required. Remaining 100 is not required. So, what to do, sir? What to do? Earlier, what was the entry you passed? Bad debt account debit to provision for bad debt. Correct? Now you pass the ulta entry. But pass the ulta entry only for 100 rupees. So, what is the entry? Provision for bad debt debit to bad debt. 100. So, by this entry, what will happen in your ledger account? 2 bad debt anta barutte illi. Instead of 2 balance carried down, it will be 2 bad debt, 100. So, total 200 reconciled. So, in your profit and loss account, what will happen? In your profit and loss, what will happen? 2 bad debt. Earlier, you showed 200, but out of this, 100 you reversed. So, minus 100. The remaining 100 will go to P&L. In your bad debt account, how it will look like? To provision. Earlier, we created a provision of 200, but now we are reversing the provision of 100. So, the remaining will go to P&L. By P&L account, 100. So, account is getting closed. That's it. So, it will come here. That 100 is coming here. Am I clear? Yes. So, in earlier case, what happened? Whenever actually the bad debt has happened, that time only we would have recorded the entry. But in this case, what we are doing? Whenever we get doubt, we create the provision. And whenever that actually happens, whenever the bad debt actually happens, we adjust it against the provision by passing this entry. We adjusted it against the provision. And if anything is remaining in bad debt, anything is remaining in provision for bad debt, either we can carry forward the balance or we will reverse it. We will reverse it. When we reverse it, the net effect of bad debt will come to P&L account. Am I clear? Any doubts in this? Online students, any doubts? Okay. So that is our provision to bad debt. Sir, in our books, they have given P&L account debit to provision for bad debts. See, P&L account, why they have given is, instead of bad debts account debit to provision for bad debt, this is first entry which we pass. Then again, this bad debt has to be transferred to P&L. What is the entry? They will record. The entry they will record is P&L account debit to bad debt account. Correct? This is the entry which we record. Hello? Listen to me carefully before you get confused. The first entry which we record is bad debt account debit to provision for bad debt. Second entry, sir, this bad debt has to be transferred to P&L. So what you do? P&L account debit to bad debt account. This is the second entry you pass. What they have given in your textbook is, instead of recording, see, once you are debiting the bad debt, once you are crediting the bad debt, it is becoming 0. Correct? Once debiting, one crediting. So instead of recording two entries, this anyhow is in the debit, this anyhow is in the credit. So this will get nullified. This will get cancelled out, this two. So what is remaining? P&L account debit, provision for bad debt, credit. So they will pass P&L account debit to provision for bad debt. Sir, which method we should follow? My suggestion to you, or my advice, or which is the correct method based from the accounting perspective, is this one. First you record bad debt account debit to provision for bad debt, then you record P&L account debit to bad debt account. This is the correct method. This method is not advisable. 2 journal entries are the correct method. In the real world also, this is how we record. First we record bad debt to debtor, then we pass the bad debt to P&L account. Am I clear? Yes? Okay. Please solve this example 6. Example 6, please go through. Yes, done. So if debts of 23-24 prove to be bad in 24-25, the loss is to be treated as 1 for 2024. But on 31st March 2024, when final accounts are to be prepared, it will be not possible to know accurately which debts will prove bad in 24-25. So what they are trying to tell you is, if there is supposed to be, there might be bad debts in 23-24, but when we close the financial statement on 31st March 2024, we may not know exactly how much is the bad debt. Same thing happened with us, right? We thought the person will not pay 200. So that is why we created a provision of 200. But it may happen that entire thing may not be bad debt, correct? So we are just getting a doubt and we are trying to create. We are not sure. But the bad debt belongs to 23-24, correct or no? But we are not sure how much will be bad debt. Correct. We are only having a doubt. So what we do is we estimate the basis of past experience. We estimate based on the past experience, and it says 6% of the debts. So 6% of total debtors may become bad debt. Become bad debt means what? Become uncollectible. We will no more receive. So for example, if 40,000 is our total debtors, 6% of this is nothing but 2,400. So 2,400 may become bad debt, which is relating to year 23-24. Sir, but does it mean that they have already become bad debt in the 23-24? No. In future, it may happen. For that, I am creating the provision in the current year only. Why? Because that debtor belongs to current year. Clear? So what I will do is I will create a provision. What is the provision entry? Don't follow this. Please follow the standard 2 entries. Bad debt account debit 2400 to provision for bad debt 2400. Next entry, P&L account debit to bad debt 2400. Clear? Yes. Provision for discount on debtors. Similar to bad debts, we create a provision for discount also. Sir, what is this provision, sir? Say, for example, we tell our debtor, say, I sold goods worth 10,000 to 3 people, A, B, and C. Say, for example, I have sold 3,000, 4,000, and 3,000 to A, B, C. Correct? Now, I have sold these goods on, say, for example, 21st March. Okay? Now, what I have put a condition, if you make the payment within 15 days, if you make the payment within 15 days, I will give you a discount of 1%. Or say 10%. Let's take 10%. I have told I will give you a discount of 10%. Now, when will we close the books of account? We close the books of account on 31st March. Correct? We close the books of account on 31st March. But on 31st March, whether 15 days are over or not over. 21st we have sold the goods. When 15 days will get over? 22nd, 23rd, 4, 5, 6, 7, 8, 9, 10, 11. 31 days, no? Correct? So, till 5th of April, we don't know whether we will give any discount or not. Correct? Correct, sir. But on 5th of April, if all the 3 make the payment, should I give the discount? Yes, sir, I should give the discount. But does that discount belong to, say, for example, this is 20, just for example purpose, let's take this as 25. But the discount which I give on 5th April, is it for 24-25 financial year or is it for 25-26 financial year? When did I sell? I sold the goods in 24-25. So, if he comes and makes the payment on 5th April, whenever I give the discount, does that belong to 24-25 or 25-26? It belongs to 24-25. Sir, why it belongs to 24-25? Because I have sold the goods in 24-25. Discount should also go there. Correct, sir. But whether I am giving the discount in this year only? No, sir, I am not giving discount in the this year. I am giving discount in the next year depending upon their payment. Okay, good. So, I cannot pass the expenses now only. Why? Because we don't know whether we will receive. But can we create a provision looking at the past of Mr. A, B, C? Can we create a provision? Can we know? I mean, can we have a probable outcome? Say, for example, I will take Mr. A will definitely make payment by 5th April, sir. Mr. B, doubtful, sir. Mr. C, guarantee he will make the payment. So, we know 2 people are going to avail the discount. We have probable outcome. Yes, we are not sure. They have not yet availed the discount, but we think they will avail the discount. Correct? So, when we know already that they will avail the discount, can we record a provision entry here only? Can we make the provision for the discount? Sir, why we need to make the provision for the discount? Because discount is an expenses of this year. So, we need to book the expenses in that year only, no? Correct or no? If we can't book expense here, it will be wrong. Accrual concept. Correct? And your financial year concept, periodicity concept. Correct? The discount belongs to which period? This period. But if you book it here, it will be wrong based on periodicity concept. Correct? So, what we will do is, we will create a provision here only. Just similar to bad debt. There, bad debt is becoming uncollectible. Here, discount is, we are giving discount to encourage the collection. It is an expenses. Bad debt is also expenses. This is also expenses. So, what is the entry we can pass on 31st March? What I will do is, I will create discount to customers account debit. I will create a provision. Provision for discount to customers. How much I will do? Should I take entire 10,000 and create a discount of 10% provision? Answer is no. Out of 10,000, you know that this person is not going to pay on 5th April. So how much you are expecting? I am expecting this person and this person. So what is the total? 3,000 plus 3,000 is 6,000. So I am expecting 6,000 to be collected before 5th April. So on this 6,000 I can make a provision. So 6,000, what is the discount amount? 10%. So that will be 600. I'll create a provision for 600. This needs to be transferred to P&L account. What is the entry? Profit and loss account, debit 600 to discount to customers 600. So this account is getting closed and this will be carry forwarded in the balance sheet. This will go to P&L. First entry, second entry. In your book, what they are trying to do? Here it is getting debited, here it is getting credited. So what they do? They cancel it out. And they want to directly record P&L account debit to provision to customers. Which is correct technically, but this is the better way of recording. This is the better way of recording. First entry, second entry. So follow this. My advice is to follow this. Please note down the entries. Here only I will write it. The first entry will be discount account debit to provision for discount. Okay. Second entry will be P&L account debit to discount account. Now don't get confused. If you record discount account debit to provision, again here P&L account to provision ಮಾಡಬೇಡಿ. P&L account to discount account ಮಾಡಬೇಕು. Am I clear? I'll just write it cleanly so that you can understand. The first entry will be discount debit to provision for discount. Second entry will be P&L account debit to discount account. To discount account. Careful, be careful about this. This is what is getting reversed. Clear? Next appa, reserve for discount on creditors. This is exactly opposite appa. In this case I told no. Say for example on 21st March, I purchased goods worth 10,000. And he told me if you make the payment by 5th April, I will give you 10% discount. Now, when your books are getting closed on 31st March. Correct? So what you are saying is, sir, there is a chance that I may make the payment before 5th April. I may make the payment before 5th April. But have you made the payment? If you would have made the payment by 31st March, you would have got the discount and you would have recorded the amount itself. Say for example, when I purchase this goods, what is the entry I will do? Purchase account debit to Mr. say for example, A, B, C. This is the first entry I would have recorded. Now suppose I made the payment on 31st March. So what is the entry I will pass? Mr. ABC account 9,000. Sir, why 9,000? I am going to get discount of 10%, correct or no? Why? If you make the payment before 5th April, you will get the discount of 1,000 rupees. Sorry, 1 second. Mr. A, here, how much was the amount? 10,000? 10,000. So, how much am I settling Mr. A? Am I settling 10,000 or 9,000? Sir, I am paying him 9,000 rupees. I am paying him 9,000, but the amount which is getting settled is 10,000 rupees, correct or no? You purchase the goods worth of 10,000, but you are paying only 9,000. But how much is the balance getting settled? 10,000 rupees. Sir, yes, 1,000 is what? 1,000 is discount. Discount received, is that an income? Yes, sir. So, to discount received 1,000. Where I am making payment from? From my bank. 9,000. So, how much is the amount that is getting settled? The amount getting settled is 10,000 rupees. Clear? Correct, sir. But how much you are paying? Only 9,000. What is happening with remaining 1,000? That will be my income, which is known as discount. Clear? If you would have made payment before 31st March, this is the entry you would have recorded. Correct? Correct, sir. This is the entry I would have recorded. But you don't know whether you are going to make the payment before 31st March. I mean, as on 31st March, let us assume that you have not paid. Okay? Till 31st March, you have not paid. But you say that I may pay before 5th April, sir. You may pay. How sure are you? Sir, 80 to 85% I am sure that I will pay. Okay, done. If you pay before 5th of April, then this entry will come when? It will not come on 31st March. It will come on 5th April. Correct? 5th April 26. But does this discount belong to the next year or will it belong to the current year? It belongs to the current year. Why it belongs to the current year, sir? Because you have purchased goods in the current year. You have purchased goods in the current year. Not to make confusion, let's keep this as 25. Okay. You have purchased goods in the current year. So this discount belongs to which year? So discount belongs to 24-25. Discount belongs to 24-25. But when are you actually going to receive discount? 25-26. If you record this entry in 25-26, then discount goes in this year. Correct? Which is incorrect. Why it is incorrect, sir? Because the discount belongs to 24-25, sir. Why it belongs 24-25? Because I purchased the goods in the year 24-25. Right? Yes, sir. So discount should also go there. Yes, sir. Correct. So what I will do, just like how I created a provision for bad debts, I will create a provision for discount also. So what I will do is, I will record an entry like this. And what I will do, this will get debited. Mr. ABC will get debited. Mr. ABC will get debited. Only for how much? Only for 1,000 rupees. How much discount is going to give? Only for that much. To discount received. Or instead of writing ABC, sorry, just write down like this. Don't write ABC because we are creating a provision. Correct or no? So what is the entry we'll do? Provision for discount. 1,000 rupees to discount received 1,000 rupees. Now this 1,000 rupees will be transferred to P&L. What is the entry? Discount received account debit to P&L account. Your book has given you directly reserve for discount on creditors account debit to P&L account. Why they have given? Because here discount is getting credited, here discount is getting debited. So they want to knock it off and they want to directly pass this entry. Provision for discount account to P&L account. That is what? Reserve for discount account to P&L. Clear? Okay. Just to avoid unnecessary confusion, I'll write the entries here clearly so that you can copy it. What is the first entry? The first entry is reserve for discount on creditors debit to discount account. Sir, why to discount account, sir? Because it is an income account. So when income goes up, it will be credited. So I am crediting the discount. Yes. How much? 1,000. 1,000. Now this is an income account, needs to be transferred to P&L. Correct or no? So what is the entry? Discount received account debit 1,000 to P&L account 1,000. That's it. Sir, way to show this, sir. This will be shown under creditors. And here also, sir, in provision for discount on debtors, where we'll show this, sir? We will show this either under provision or we can show it under debtors in minus figure. Under debtors only we can show it as minus figure. Even this, sir, provision for bad debts, you can show it under debtors in minus figure. Just like how, if you remember depreciation, we used to show cost of asset 1,000 minus depreciation, provision for depreciation 100. The net amount we would have written it outside. Correct? In the same way, this provision can be shown under the debtors in a negative figures. All the provision for discount also can be shown on the debtors only, but under negative figure. Positive debtors minus negative figure, the net balance will come in the outer column. In the same way, this also. Provision reserve on discount of creditors, what we can do is creditors total balance minus any reserve, the net figure will come in the outer column. Clear? Yes? Okay. Okay. The next one is interest on capital. The first thing always remember, whenever funds are infused, that means whenever capital is introduced, what is the entry you pass? When capital gets introduced, what is the entry you pass? Cash account debit to capital account 1 lakh, 1 lakh. Capital introduced by cash. That means what? Owner bought 1 lakh rupees to the business. So what is the entry will pass? Business got cash? Yes, sir. Business got cash. So cash balance will go up? Yes, sir. So when balance goes up, it will be debited. Next is capital account. Owner's account, correct or no? We have to increase the capital also when he brings the money. So when capital goes up, it will be credited. So cash account debit to capital account. Clear? Okay. Now, whatever money he has bought, no, you need to pay interest on that. Clear? You want to pay interest. Why you want to pay interest? Because the owner has put in the money for the business. Correct or no? If owner would have not put the money, and what owner would have done? In the name of the business only, if you would have taken loan, then he would have paid interest to the bank. If you would have taken loan from the bank, who would have paid interest? Business. Now, the same interest which they are going to pay to the bank, instead of paying it to the bank, let's pay it to the owner. Correct? So, for example, you are going to pay interest to the owner. Interest to owner. Is it not an expense to business? Yes, it is an expense to business. So, when expense goes up, what is the entry? Debit entry, sir. Interest account debit, sir. Why? Because it is an expense, sir. Why it is an expense? Because we are paying, business is paying the interest. Correct. Paying interest to whom? To the owner. So, his account is what account? His account is capital account. When I pay interest to the owner, I mean, his account will go up or come down? His account will go up, sir. Why? Because he is going to get the money in his account. Don't think about physical movement of the money in the bank account. I am not talking about bank account. In just books of accounts. I have to pay interest to the owner, but owner will not take out the interest as it is. What he will say? Business needs to pay interest. No, you add it to my capital balance. You add it to my capital balance. I will take the money whenever I want. Owner will always say like that. Why owner wants to take money out of his own business? Correct? Sir, but his own business, why he is paying interest to himself? Understand. Entity concept. Business is different. Owner is different. Clear? So, any interest payable on the capital will be transferred to capital account only. So, interest account debit to capital account. Why it is transferred to capital account? As I told you, interest will not immediately paid out of bank account. Why? Owner says don't pay me. You add it to my capital balance. If you keep adding it to my capital balance, it will show how much money I have invested in the business. So, that is why I will take the money whenever I want. So, let's do one thing. You add the balance to my capital account only. Whatever interest you need to pay, you add it to my capital account. Okay. See, generally interest on capital will come only in partnership firm. Partnership firm. It will never come in sole proprietorship. Sole proprietorship baralla. Sir, why sole proprietorship usually baralla? Because what the concept is, why interest on capital under sole proprietorship will not come is, you cannot pay interest to yourself anta heltare. Income tax alli you cannot claim this expenses on interest on capital if it is a sole proprietor. But if it is a partnership, then yes, you can claim the expenses, interest on capital. Sir, why it is different things, sir? Why it is not allowed under sole proprietor? Why it is allowed under partnership firm? Understand one thing, in sole proprietor, even though your accounting standard says entity concept, business is different, you are different. But understand one thing, whatever it is, ultimately who is owner of the business? The sole proprietor himself. So, can he pay interest to himself? Answer is no. That is why they don't allow the expenses. Only under Income Tax Act. Even they are not allowing under Income Tax Act, sole proprietorship doesn't have any law. they don't have to comply any law. So what is the law which is actually looking after their compliance? Income tax. So if income tax itself is not allowing that expenses, we don't record that expenses. Where? Under sole proprietorship. But under partnership, entity is different, partner is different. Here, don't say that partner is also, sir, partnership firm on same, even the partner is also same. No, it is not same. Partnership firm will have multiple partners. 1, 2, 3, 4, 1 antu barala, 2, 3, 4, 5 or a number. But partnership firm is totally different, partner is totally different. It is not that when interest is paid, it is not that partner is taking money from one pocket and putting to another pocket. No, two different pockets are there. In fact, for a partnership firm, there is a separate PAN. For a partner, there is a separate PAN. Whereas in case of sole proprietorship, there is no separate PAN for the business. There is no separate PAN for the individual or the owner. The owner PAN itself is used to file income tax return of the business. I repeat again, there is no separate PAN in sole proprietorship. The owner's PAN number is only used to file the income tax return of a business. That is why when the business is getting filed in the name of the owner himself, how can he show income to himself? In other words, if you open his IT return, sole proprietor IT return, business, yes, under business he will show interest to owner. Okay, done. Interest to owner, I will deduct it. Okay, fine. Let's see. Let's say income tax allowed the deduction. Okay, allowed the deduction, sir. I will reduce out of my income whatever interest I am going to pay. Okay, sir, allowed, sir. Correct, sir. Expense reduce, sir. Net profit declaring. Correct. But interest is also an income for owner. Yes, sir, it is an income for owner, sir. Okay, if it is income for owner, again add it to his IT return, saying interest from business. Ultimately, what happened? You reduced from the business, you show it under interest income. ಅರ್ಥ ಆಗ್ತದೇನಿಲ್ಲಪ್ಪ ನಾನು ಹೇಳ್ತಿರೋದು. ಬಿಸ್ನೆಸ್ ಪ್ರಾಫಿಟ್ಸ್ ಇಂದ ಇಂಟ್ರೆಸ್ಟ್ ನ ರೆಡ್ಯೂಸ್ ಮಾಡಿದ್ರಿ, ಯು ಶೋಡ್ ದ ನೆಟ್ ಪ್ರಾಫಿಟ್. ಗುಡ್. Then what will happen to that interest? That interest also need to be considered as income of the home, of the owner. So again show it as interest income. Ultimately what result it gave? Nothing. You reduced up, you added down. Rather than doing that, don't allow the interest only. If you are still not understanding, look here. Let's say this is IT return. IT return ಅಲ್ಲಿ 5 heads of income ಇರುತ್ತಪ್ಪ. ಒಂದು ಸ್ಯಾಲರಿ, ಒಂದು PGBP, that is profits and gains from business or profession. Next is capital gains. Next is other source. Okay, so salary, PGBP, capital gains, housing, other source, and one more is house property income. House property income. Okay, now in business you show, say for example 1 lakh is the profit minus 10,000 is the interest. So how much is the profit you are declaring? 90,000. Okay, this 10,000 is interest to whom? To myself, sir. Okay, correct. So this is also your income, huh? Yes, sir. So interest income, 10,000. What is the total result? 1 lakh. What was the earlier profit? 1 lakh. What is the income now? 1 lakh. So why to reduce here and why to add here? That is why they say in sole proprietorship, you are not allowed to claim interest on capital, nor you are allowed to take any salary. Yes, sir. Okay, let's take you are taking salary. 1 lakh is your profit. Say for example, 1 lakh is your profit. Out of this, you are taking 90,000 as salary. What is remaining? 10,000. So your profit and gains from the business is 10,000. Yes, sir. But are you getting salary? Yes. Salary head 90,000. What is the total? 1 lakh. What did it make? Here also it was 1 lakh only. No, here also it is 1 lakh. That is why in sole proprietorship, they don't allow you to claim any expenses which is paid to the owner in the form of interest or salary. In other words, I myself cannot pay to myself. Interest na nange nane togolakagala, salary na nange nane kodakagala. Understanding? Yes. So that is why under sole proprietorship, interest on capital is not allowed, whereas under partnership it is allowed. Why? Because both are having different PANs. So in partnership what happens? Partnership firm the IT return ಬೇರೆ, partner the IT return ಬೇರೆ. ಇವ್ರದ್ದು ಇಲ್ಲಿ ಇಂಟ್ರೆಸ್ಟ್ ಕ್ಲೇಮ್ ಮಾಡಿದ್ರೆ ಎಕ್ಸ್ಪೆನ್ಸ್ ಅಂತ ಇಲ್ಲಿ ಆಡ್ ಆಗುತ್ತೆ. ಇಲ್ಲಿ ಆ್ಯಡ್ ಆಗುತ್ತೆ, ಇಲ್ಲಿ ಮೈನಸ್ ಆಗುತ್ತೆ. ಯು ಆರ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡಿಂಗ್? ಬಟ್ ಅರ್ಲಿಯರ್ ಕೇಸಲ್ಲಿ ಏನಾಗ್ತಿತ್ತು, ಇಲ್ಲೇ ಮೈನಸ್ ಆಗ್ತಿತ್ತು, ಇಲ್ಲೇ ಆ್ಯಡ್ ಆಗ್ತಿತ್ತು. ಸೊ ಇಟ್ ಡಿಂಟ್ ಮೇಕ್ ಎನಿ ಡಿಫರೆನ್ಸ್. ಬಟ್ ಹಿಯರ್ 2 different pans. That is why it is allowed. Interest on drawings is exactly similar to interest on capital. Here, earlier interest on capital is for what? The business was paying interest to the owner. Here it is ulta. Owner has taken the money out of business. So whatever money has been taken out of the business by the owner, for that owner will pay the interest to the business. Owner will pay interest to the business. Understanding? Earlier case, business used to take money from owner. That is why business used to pay interest to the owner. Now ulta, owner is taking money out of business. That is why owner will pay the interest. Now whatever interest owner is going to pay to me, it is an income to me. Correct or no? So income will be credited. Income is credited. Where it will get adjusted? It will get adjusted in my capital account only. Then this interest will be transferred to P&L account. Interest on drawings account debit to P&L account. Clear? Remember, here also same thumb rule. What is the thumb rule? Sole proprietorship not allowed. You cannot pay interest in sole proprietorship. Neither you can receive interest in sole proprietorship. Clear? What is where it is allowed, sir? Interest on drawings or interest on capital? This both the things are allowed in partnership firms or LLP. Partnership firms or LLP. Clear? Both this, interest on capital, interest on drawings. Am I clear? Yes? Okay. Next loss is accidental loss of an asset. Accidental loss andre eno? Fire, earthquake, etc., etc. Natural disaster or man-made disaster, whatever it is. When you lose an asset, say for example, this computer was here, this laptop was here. While I was getting up and walking like this, a student came and pushed this laptop and it fell down. Correct? Now, when laptop fell down, it entirely broke. Otherwise, best example, Gopi Bahu. I asked her to wipe the laptop and make it clean. She took the laptop to the sink, poured the water, shampoo, full clean. When I came back, laptop is shining like anything. Switch on, water is coming out of the speakers. Then I realized what has happened. Correct? So, this was an asset earlier, but no more it is an asset. Correct or no? Why? Because it can't be used. Water is coming out of it. Out of the speaker, out of the USB point, out of the charging point, everywhere water is coming out. It had very good bath. Correct? So, nowhere it is coming out. I mean, nowhere it is going to start. So, it was an asset earlier. Now, it is no more an asset. If it is no more an asset, we have to reverse the asset. To reverse the asset, what you do? When you want to create an asset, you debit it. When you want to reduce the asset, you are going to credit it. So, for example, to computer account, say for example, I paid 1 lakh rupees, 1 lakh gone. Now, what is the loss? What actually happened? The thing what has happened is your Gopi Bahu has washed it cleanly. So, it is a loss. Correct? So, loss is an expenses. So, loss, accidental loss account debit to computer account. Now, this accidental loss will be transferred to P&L account. How it will be transferred? P&L account debit to accidental loss. To accidental loss. So, accidental loss account debit to asset account, P&L account to accidental loss account. Clear? Everybody is following? Yes, sir. Now, what happened? I knew that I have a Gopi Bahu in the house. I knew that there is a Gopi Bahu in the house. So, what I did is, I took insurance. I took the insurance. Clear? So, how much insurance I took? I took insurance of 1 lakh rupees. That means what? Whatever is the value of the asset, that much I have taken the insurance. Whatever is the value of the asset, that much I have taken the insurance. So, what happens? Gopi Bahu washed my laptop. Gone. Correct? Gone, sir. Done. Now, what happened? Insurance company says, don't worry, you have already paid me premium. I will pay you back the money. Oh, excellent. Correct? Now, tell me, is there actually a loss? Is there actually a loss? There is no loss here. Why there is no loss? Because that accidental loss is getting covered by the insurance. So whenever this incident happens, whenever the laptop gets washed by Gopi Babu, I'm going to receive money from whom? From insurance company. From insurance company. So insurance company is a receivable for me. That means I have to receive money from insurance company. Correct or no? Yes, sir. Correct. So when I have a receivable, I need to debit it because it is an asset. So what I will do is insurance account debit, not account, insurance company account. Insurance company account debit 1 lakh to computer account 1 lakh. Sir, why you are crediting computer still, sir? Why you are crediting the computer still? I am creating computer because it is no more an asset, sir. Gopi Babu, full clean. Asset illa. So when asset is not there, you have to reverse the asset. You have to reduce the asset, correct? So I am reducing the asset. But instead of showing it as a loss, I am not showing it as a loss. Rather, I am showing it as money receivable from insurance company. Insurance company becomes my receivable. So when receivable goes up, it will be debited. Why it will be debited? Because it is an asset account. Clear? I have to receive money from insurance account, insurance company. So that is why I am debiting it. When I receive the money, what is the entry I will pass? Bank account debit 1 lakh to insurance company 1 lakh. To insurance company 1 lakh. That's it. Done. Accounts get closed. Sir, what if I have not insured full 1 lakh, I have insured only 50%. I have insured only 50%. Okay, we have insured only 50%. Yes, sir, I have insured only 50%. Then what will happen, sir? Then what will happen is simple, sir. Out of 1 lakh, 50,000 you will receive, 50,000 loss. So what I will do? Accidental loss account debit 50,000. Insurance company account debit 50,000. To computer 1 lakh. To computer 1 lakh. 50,000 loss, 50,000 receivable. Total 1 lakh. Clear? Everybody is understanding? Yes? Any doubts on this? Now what happens with this accidental loss? 50,000 will be transferred to P&L. P&L account debit to accidental loss. Clear? Yes? Please record this entry in your book. Don't go by this. I request you to please record this entry, because your book entries are very confusing. When I ask you to record, write the entries, please write the entries. Accidental loss account debit 50,000, insurance company account debit 50,000, to computer account 1 lakh. This one also you please record. Here you, for this one you give a heading fully insured. Fully insured. Here you give the heading partly insured. Partly insured. Fully insured, what is the entry? Insurance company account debit to computer account. Partly insured, what is the entry? Accidental loss account debit 50,000, insurance company account debit 50,000, to computer account 1 lakh. They have also done the same thing in your book, but what they are telling is, first you record 50,000 like this, then again you record 50,000 like this. So here what they have done is, rather than recording accidental loss account debit to computer account 50,000 separately, they directly recorded P&L account debit to computer account 50,000. It is confusing, so that is why you better follow my method of accounting. Fully insured, this is the entry. Fully insured, this is the entry. Partly insured, this is the entry. If you are not able to see it clearly, I will write it down. Fully insured. What is the entry? Insurance company account debit to computer 1 lakh, 1 lakh. No loss. There is no loss here. No loss here. Why? Insurance is paying us for the loss. Whereas here partly insured. Partly insured up to 50,000, let's say. So what happens? There is an accidental loss by how much? By 50,000. Remaining 50,000 will come from insurance company account debit 50,000. To computer 1 lakh. To computer 1 lakh. Clear? So these two entries you write, and here what will happen? This needs to be transferred, correct? So P and L account debit 50,000 to accidental loss. Please note it down. Okay, done? Yes. Next is accidental loss of stock. Please listen to me carefully. This is a little bit complicated. Don't worry about these entries. Please forget about this entry. They are complicated. Look at my entries. You will understand in a better manner. I request you, please. Suppose I purchased goods of rupees 1 lakh. Out of this 1 lakh goods, 10,000 worth of goods lost due to fire. Due to fire. Huh? Everybody is following? Yes, sir. Now, again, here, two ways of accounting this. One way, no insurance. Second, part insurance. I'll make more space. Not insured at all. Partly insured. Fully insured. Three circumstances. One is not insured at all, one is partly insured, one is fully insured. Suppose, how much did you purchase, sir? I purchased 1 lakh. So what is the entry you record when you purchase the goods? Sir, purchase account debit 1 lakh to bank account 1 lakh. Very good. So in P&L, how does it look like? In P&L, it looks like this, sir. Two purchases 1 lakh. Correct? Yes, sir. Correct, sir. But tell me, in this 1 lakh purchases, how much is actually lost for fire? Sir, 10,000 worth of goods lost for fire. 10,000 worth of goods lost for fire. Okay? Yes, sir. Correct, sir. Now, let's say we have not done any sales. We have not done any sales. So, entire this purchases is our closing stock only. So, by closing stock, how much? Sir, by closing stock will be 10,000. Why? 10,000 lost in the fire, sir. Correct. So, are you making loss here? See here, 1 lakh 90,000. Are you making loss? Remember, profit and loss trading account. If balancing figure comes this side, it is GP. If balancing figure comes this side, it will be gross loss. So, where the balancing figure will come? This side. Correct or no? Yes, sir, correct. Now, what is the name of this account? Trading account. Now, tell me, I'll ask you a question. Have you made this loss? Sorry. Have you made this loss because of trading, or have you made this loss because of no? I mean, my question is, has this loss been attributable to trading, or this loss should be attributed to accident? This loss should be attributed to trading loss, or this loss should be attributed to accident? Sir, when will the trading loss happen, sir? Trading loss will happen when, in simple terms, I told you example of COVID. I purchased the masks at 10 rupees. Now I am unable to sell it at even 5 rupees. That is trading loss. That means the value of the goods has come. Yeah. ಇಲ್ಲಿ ಬರ್ತಿಲ್ಲ ಆಗಿಲ್ಲ ಏನು ಎನ್ಕೋಡರ್ಸ್ ಅಂತ ಕೇಳ್ತಿದ್ದಲ್ಲ Okay, sorry for a little disruption. There was some network issue. Okay, coming back. Now, where were we? So, I purchased goods worth 1 lakh. In that, 10,000 rupees was fire. So, my purchase is 1 lakh. My closing stock is 90,000. So, there is a loss now. The loss of how much? The loss will be 10,000. But my question to you, what is this account called as? This account is called as this trading account. So my question is whether the loss happened due to trading or whether the loss happened due to the reasons other than trading. Loss happened due to other than trading. So what is trading loss? I was explaining that only. Suppose you purchase the goods at 100, you sell the goods at 90. This is called as trading loss. Why? Because you know that you purchased at higher cost and you are trying to sell at lower cost. Sir, who does that, sir? Yeah, they do. Suppose you are going for winding up of the business, you want to close the business, you are done and dusted with the things. Correct? That is why whatever stock is there, you want to clear all the stock and sell it at some price. Correct? So here, trading loss. Why? Because you know that you purchased at 100 and you are selling it at 90 and this loss is happening during you sell the goods or during you trade these goods. Trading account means what? Trading account captures your sales purchase data, correct or no? So, this activity of selling is part of trading, correct? So, when you sell at a price lower than the purchase price, of course, there will be loss. Such loss are called as trading loss. Accept everyone? Yes. But in this case, have you lost due to such activity? You tried to sell at a price which is lower than the purchase price? No. Sir, I have not made any sale only, sir. Correct or no? So, there is no trading activity. There is no trading activity. So what exactly has happened then? What exactly has happened is, it is loss by accident. So it should never come in the trading account. If trading account shows a loss, it should be loss due to sale or purchase. Here, the loss is not due to sale or purchase. The loss is due to accident. The loss is due to accident. So it should never come in trading account. Then where it should come, sir? It should come below. What is below, sir? Profit and loss account. Profit and loss account. So what we do is we have to reduce the purchases to an extent which is lost in fire. How do we do that, sir? Pass an entry. What is the entry? The entry will look like this. Loss of goods due to fire account debit 10,000. Why it is debiting, sir? Because it is a loss or it is an expenses. Whenever loss or expense goes up, it will be debited. So we are debiting it. To what, sir? To what now? You tell me that. To what? To purchase account 10,000. Sir, why purchase account, sir? Because this will no more form part of purchases now. Just like how it is no more part of the closing stock, it should no more be part of the purchases. Why? Because we purchased, yes, but that purchase is no more available with us. Why? It is already lost. So it should never come under purchases. Just like how it is never coming under closing stock. Why it is not coming under closing stock? Because there is no stock. Why it should not come under purchases? Because there is no purchases. Why? Because whatever you purchased is lost. Understanding, everybody? So what happens, sir? You reduce it out of purchase. So what is the net purchases now? Net purchases is 90,000. What is the closing stock? 90,000. Is there any loss or profit? No loss, no profit. Sir, why there is no loss or profit? Because I have not sold anything. Whatever I have made purchases is all at my closing stock. Sir, but there is actually 10,000 rupees loss now, sir. Coming where? Where will come? But in trading account, there is no loss. Why? Because whatever I have purchased, I have not sold anything. So I have not incurred any loss during trading activity. Correct? Correct, sir. So that is why whatever 10,000 was lost due to fire, it is reduced out of closing stock. It is reduced out of purchases as well. Already closing stock is showing net only. So it should be reduced out of your purchases. Okay, sir, done. What next, sir? What next? This loss account has to be transferred to P&L. Correct or no? So what is the entry? Profit or loss account debit to loss of goods 10,000. So now this account is getting closed. So in P&L account, ille ಕೆಳಗಡೆ P&L appa, P&L account. Here what will happen? To loss of goods due to fire, 10,000. Now suppose there is no profit, nothing else is there, so it will become what? It will result in by net loss 10,000. This is the balancing figure. Clear? This is the balancing figure. Everybody is understanding? Yes. So in simple words, what we are trying to do, yes, 10,000 is a loss for sure, but this loss is not due to trading. That is why we are trying to shift this loss from trading to P&L account. This loss doesn't belong in trading account. That is why we are trying to shift it from trading account. Where did we shift it? We shifted it to P&L account. Clear? Loss is a loss, sir. Illi loss agila antalla, loss aitu tane illi. We are showing the loss, correct or no? By net loss 10,000, we are showing it, right? Yes, sir. But only thing is, instead of showing it in trading account, we are showing it in P&L account. Why it should not be shown in trading account? I have already explained you the reason. Because loss is not suffered due to trading activities. Loss is suffered due to non-trading activities, which was an accident. If loss was suffered due to non-trading activities, it will come in P&L account. Clear? So what we did, we just pushed the loss from here to here. So to push that loss from trading account to P&L account, we pass this entry. From after pushing it, we need to record it in P&L account. So we pass this entry. Clear? Everybody is understanding? Any doubts in this? Okay. Now coming to the partly insured part. Same question. Purchased 1 lakh, lost due to fire 10,000, insured 5,000. 5,000 was insured. 5,000 was insured. Okay. Now what will happen, sir? Now what will happen is simple. Trading account, everything will remain same, sir, in trading account. Two purchases. Sorry. Minus loss due to fire. How much is the loss? 10,000. By closing stock 90,000. So ultimately, any gross profit or gross loss? No gross profit or no gross loss. What will happen, sir, next? What will happen? Whatever will happen in P&L account. So what will happen in P&L? First record the entry. Let's record the entry. What is the entry? Loss of goods due to fire. How much is the loss? Sir, loss is 10,000. Very good, 10,000. Two purchases. Correct? Everybody? Yes? Yes, sir. Next. Now, out of this loss, some is being recovered by insurance company. Some amount is being recovered by insurance company. Correct or no? Yes. What is the amount? 5,000 rupees. Correct? Yes, sir. So insurance company account debit 5,000. So if insurance company is paying us 5,000, my loss from 10,000 will become only 5,000. My loss from 10,000 will become only 5,000. Correct or no? Correct, sir. So to loss of goods 5,000. Okay. Now, what is the balance remaining in this account? 10,000 debit, 5,000 credit. So there is another 5,000 on the debit side. So we will transfer that to P&L account. P&L account debit to loss of goods. 5,000, 5,000. So how much will be shown in P&L account? Will show only to loss of goods. Will show only 5,000. Now you may come up with a question. What is the question you may come up? Sir, you reduce 10,000 here, but you are showing only 5,000 as loss. So here also we should reduce only 5,000. No, sir. Answer is no. You lost the entire 10,000 worth of goods. So that entire 10,000 should be taken out of trading account. Loss is actually 10,000 only, but you are recovering something from the insurance, and that will happen only in the P&L account. That adjustment will happen only in the P&L account. Okay, there is one more alternative of recording this. What is the alternative? Alternative will be here. Alternative will be here and here. These two steps you can be alternative. What are the alternatives? Alternative. Insurance, sorry. When we receive the money from insurance, it is our gains, correct or no? It is income. It is coming inside. It is an income for us. So when income comes to us, the income will go up. So it will be credited. So to insurance proceeds. Receive from where we'll receive? From insurance company. Or let's assume we have already received. Bank account debit to insurance proceeds. How much you are receiving? 5,000. Now, this is kind of a income nature. This needs to be transferred to P&L. Correct or no? So, what is the entry you pass? Insurance proceeds 5,000 to P&L 5,000. Okay, sir, done. What is one more entry remaining? This loss has to be transferred to P&L, correct or no? Yes, sir. So P&L account, sir. P&L account debit to loss of goods due to fire. How much? 10,000, 10,000. If you record these entries, then what will happen? Here is, here instead of 5,000, this will show as 10,000. This will show as 10,000. Here there will be one more item called as by insurance proceeds, which will be 5,000. Net effective will be 5,000 loss. 10,000 and 5,000 ಮಾಡಿದ್ರೆ 5,000 loss. Here it was directly 5,000 loss. Here you showed 10,000 loss, 5,000 received, net 5,000. Here in first case you directly showed 5,000 as loss. Now everybody might have a question. Sir, here insurance company is showing debit. No, sir. What will happen to that? What will happen is simple, sir. When you receive the money, bank account debit to insurance account. 5,000, 5,000. Here also, instead of recording bank account, if you would have recorded insurance company account, then what would have happened? One more entry. Bank account debit to insurance account, company account. That's it. Account will get closed up. Accounting is a very easy topic. Accounting is a very easy subject. There is always a double entry. Here we showed it as receivable. Once it gets received, it will become credit. And where do we receive? We receive in bank account. Clear? So, in first method, we directly showed 5,000 as our loss. In second method, what we showed? 10,000 as loss we showed, and 5,000 we show it as received from the insurance company. received from insurance company. Net in both the cases will be 5,000 only loss. Here directly 5,000, here indirectly 10,000 minus 5,000 is 5,000. Result is same, sir. ಇನ್ನೂ ನಿಮಗೆ ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡಬೇಕಂದ್ರೆ earlier directly we had written 5,000. So what was the thing? Net loss was 5,000. In the second case, what happened? Loss 10,000, insurance 5,000, ultimately 10k, so loss 5,000. Did it change? Nothing changed. Only the way you present changed. Earlier you recorded this entry plus this entry, done and dusted. Here, earlier you recorded these 3 entries. These 3 entries you recorded earlier. But in second case, you recorded this entry and these 3 entries. Clear? Any doubts in this? I'll give you time to note it down, but as of now, I hope you are clear about it. Any doubts in this? Anybody is having doubts over this? Anybody still having questions? Sir, we are reducing 10,000, but here only loss is 5,000. Sir, loss is actually 10,000 only. Goods are lost worth 10,000 only. So that is why in trading account, we should always reduce 10,000. In P&L account, you show the adjustment of 5,000 rupees received by the insurance company. Is everybody understanding? Can I go ahead? Can I go ahead? Okay. The next and the last part is fully insured. In this case, it is simple, sir. You purchased you purchased 1 lakh rupees worth goods. Out of this, 10,000 is loss due to fire and entire 10,000 is insured. So what will happen, sir? What will happen is simple, sir. This is your trading account. Purchases 1 lakh minus loss 10,000. Remaining 90,000. Buy closing stock 90,000. Okay? Below is your P&L account. In your P&L account, there are 2 ways of recording it. One, nothing. No loss, no profit. Accounts get closed. P&L allu ಏನು ಲಾಸ್ ಇಲ್ಲ ಸರ್. ಯಾಕೆ ಲಾಸ್ ಇಲ್ಲ ಸರ್? ಯಾಕೆ ಲಾಸ್ ಇಲ್ವಾ? 10,000 ಬೆಂಕಿ ಎತ್ತಿತ್ತು, ಅಷ್ಟು ಇನ್ಶೂರೆನ್ಸ್ ಮಾಡಿಸಿದೆ, ಇನ್ಶೂರೆನ್ಸ್ ಬಂತು ಅಷ್ಟೇ. So if you want to show the journal entries, how the journal entries will look like, see here. First journal entry, loss due to fire 10,000, 2 purchases 10,000. Correct, sir? That is this. Correct, sir. Second ಏನಾಗುತ್ತೆ sir? Second, insurance company account debit to loss due to fire 10,000, 10,000. See here, this is getting debited by 10,000, this is getting credited by 10,000. Account closed, so there is no loss. Sir, what happened to this account, sir? This account, what will happen? That account, what will happen? You'll receive the money. Bank account debit to insurance company account 10,000, 10,000. Done. This account is also getting closed here. Debited, credited. This is how, if you record these entries, you will record it like this. Okay. There is one more way of doing it. Sir, one more way. What is that way, sir? What is that way? See here. Trading account will remain the same as it is. Only thing that will change is your P&L account. What will change in P&L account, sir? To loss of goods due to fire. How much? 10,000. By insurance proceeds 10,000. Any profit loss? Nothing. Same. Ultimately result is same, sir. Only presentation changes. So here what are the journal entries you will record? First journal entry will remain the same. Loss due to fire, debit to purchases. 10,000, 10,000. Okay. Next, insurance company account debit 10,000 to insurance proceeds 10,000. Yes. Next, you need to transfer this to P&L. You need to transfer this to P&L. So what is the entry? Profit and loss account debit to loss due to fire 10,000, 10,000. This is transferred now. Correct? Fourth, insurance proceeds account debit 10,000 to profit and loss account 10,000. So these two are getting closed. Now, here we need to receive the money. What is the entry that I will pass, sir? Simple. Bank account debit to insurance company account. That's it. This account is also getting closed. Is everything okay? Are you guys clear about the things? Now is the time for you to take a screenshot or a photo, whatever is suitable. I'll just draw the lines. This is one part. Sorry. You please first take this. Can you guys see the screen? Anybody please respond. I hope you guys are able to see the screen. Okay, I'll assume that you are able to see the screen. Okay, this is not insured. Now take partly insured. Take two photos of this. First you take this half. I don't know whether you guys are able to see the screen. Just a second. Sorry. First take this part. Okay, once done, we'll take this one. Partly insured. Partly insured. Done, partly insured. You can take one more screenshot so that this till here it is covered. Next, you take this. This is also partly insured only. This adjustment is for partly insured. Okay. Now this is for fully insured. Fully insured. Okay. Yes. I don't know, due to network issue today, it might have been some disturbance. If these things, when I was writing, if it is not visible, then I will revise this topic again tomorrow. If it was visible, then good, well and good. If it is not visible, don't worry, don't get panicky. We will revise this again tomorrow. I will explain it to you again neatly tomorrow so that you understand this concept. This concept is very important because it will help you to solve all the sums respect to stock and loss. Clear? So we'll go through this concept tomorrow again. No issues. But if it is already visible, then it's well and good. If it was not visible, then we'll solve it tomorrow. Okay? Okay, guys. Thank you. Take care. Bye bye.